Howdy folks, quick update on natural gas. I've just done a video on the overall market perspective and I forgot to talk about natural gas, but actually nothing's really changed since the weekend. It's now Tuesday afternoon, well, it's sort of approaching the afternoon. You can see on the 4-hour chart we're just going sideways, holding above that support, the green line there, and nothing really since the weekend. We had that one up, one down a few candles ago, that spike high and a little spike low. That's normally a reversal candle. And considering that followed a short move down, it's kind of supportive. You can see all the candles have held above that level, so I think it looks okay. Our position is still long from $2.51 and just holding into this. It's a 50% position, so I'm looking to add more if I can, perhaps down to the bottom of this trend line. I was actually tempted after this signal here, this one up, one down, to add a little bit more, but I didn't. It's possible we could get down to the 50-period moving average and the top of this descending channel that we broke out of. This is the short-term channel. Remember, we've got a long-term channel here as well, and the bottom of that long-term channel is around about $2.44. So there's still a chance we could get down to the bottom of that long-term channel. If we break beneath that long-term channel bottom, then natural gas is in a little bit of trouble. So that's kind of now the dividing line, and it's where this red support line meets the upward sloping channel, and that's at around about $2.40. We don't really want to get below there. In fact, where I got into this trade at 251, that swing low is really where we don't want to get below. So $2.50-ish to $2.40, that region there between this red line and the top of this pink support zone, that's really the key level. We don't want to get below there. If we do, natural gas, as I said, could be in a little bit of trouble. But first of all, we've got this downward little sort of sloping downward channel. We want to hold above there. If we can hold above where we are right now, actually, that would be even better, and that's at around 269. I've just got to peer at my charts here because the lights have gone out and the screen's auto-dimmed. I can't seem to fix that, but it's okay. I can still see it just about. So we've got the 200-period moving average and the 50 and this downward channel top. That's going to be pretty good support at the top of this blue zone at around about $2.60. If we fail that, fall back into this descending channel and remain within the rising, broader, bigger channel and hold above there, that'll be okay. We don't want to break below $2.40 or so, and maybe even $2.45.50, the swing low here, where my green arrow is, where I got into this last trade position. So let's watch this. And again, if you look at the daily chart, there's not a lot more to add to that. That's the 4-hour chart on my broker. Here's the daily chart on NYMEX, 15 minutes delayed, but that's of no consequence on this study. There's the 20-period moving average, just curving down a little bit, which is not the best thing, but this is actually a bull flag, really, these last 3 daily candles, including today. So a bullish flag, holding up pretty well above the 20 and above this top yellow zone, which is a good support level, really good support level, at just around 268, 270. And we're still above there. So for now, no change. On Wednesday, there's a little bit of news coming out, 16:30 my time, so that's about 10:30 New York time, AM. We got heating oil stocks change, refinery crude runs change, distillate stocks change, well, a whole bunch of things here really. EIA gasoline production change and all that sort of stuff, crashing crude oil stocks and blah, blah, blah. So all of that will have a little bit of an effect on perhaps oil mostly. Remember, oil and gas are quite intimately entwined, with some of the oil fields producing a lot of gas. So demand and production and supply and oil wells affect gas as well, depending on where those oil rigs are situated. Some of them have got a lot of natural gas associated with the wells and the drilling. Some of them don't. So sometimes this information plays a bit of a hand in natural gas pricing. So that's where we are, really. Nothing much to add, and I'll certainly update as and when we see any changes in this chart, but for now, pretty much the same. So in summary, we want to hold above where we are if we can, looking a little weak, but certainly above the top of this downward channel, where the 50 and the 200-period moving average meet this blue support line at about 260. Then we'll allow for a move all the way down to 245, 250, but we don't want to get below this rising channel bottom that would put natural gas into a little bit of a tiz and would certainly encourage the bears and put a bit of fear into the bulls. Take care.